out for the people are holding out for the last dime in the U.S. equity markets. Good luck to you.
Boy.
Yeah, it's just been a really hard trade.
Oh, everything is. When I saw the numbers on all the major global macro guys, the hedge fund guys, they had the worst November, the worst month they've had in years and years and years. So I was kind of laughing. I said, misery loves that company. No, I don't, but because I don't. It's interesting. Platinum finally moved today. I've been long. Yeah, it's up. It was up $25. Now it's up 22. But that's a chart. But every time it fails up here. But the copper did move out, and I think it's totally on the what's coming out of Europe.
Well, you think that's all out of Europe? I mean, hold on.
Well, that's why the European equities, and I know that there's people out there who are bearish based on that formation. But again, to me, Europe is only a relative trade anyway, because if all the equity markets go south, they go south. But I think the U.S. is most vulnerable at this time. I know I'm a minority, but a severe minority, but that's right. As I said, probably a little bit early with it. But I've been rolling out of my U.S. bank stocks and buying actually some Euro. I bought UBS. I just cannot get myself to buy Deutsche Bank. So.
Well, I was looking at silver copper, and right there at the 200 day, and I thought, well, if you were ever going to get a shot at something, that's it. But
yeah, I'm looking at the same thing. I have not done a thing yet with it, and the fact that yesterday copper was such a buy, and when I wrote the blog the other night, I was going to put it in there because you saw the move in copper late last week, and it was totally, I think, in a sense that, hey, if Europe does this, and if they do it through a green infrastructure program, the demand for copper, coupled with China, is going to be just enormous. So we'll see. It's giving you so many false looks.
Well, it's been it's really hard to get excited about it, but I think if it starts getting above the 200 month, and it's trying to put an ORH month in right now. What is that number? Basically two. If it starts sustaining above 277, then maybe it's real this time.
Yeah, it's just such a long march. But it's okay. Again, a lot of consolidation. It's why I swear I love that. I'm just playing with it. I don't have, but one of my favorite charts is the Bosch Healthcare, which used to be Valiant. If you put up a weekly chart on BHC, it's just, it's unbelievable, the consolidation on that chart. I know you posted that other one from that they made a lot of money on, which was a good call.
Alicus,
yeah.
And a lot of guys made a bunch of money on Obsiva too, but that was a big out yesterday, right at the fibs.
But if you look at BHC on a weekly,
well, look at it at the monthly. It's been going sideways for almost 3 years.
Oh, is that what I want? Yes. No. I want the weekly. Look at the weekly.
All right.
Look at the weekly.
Yeah. Well, once it broke out above the 200 week, it's just been ripping.
Yeah, I missed. My daughter Lizzie has been really good with this because she understands. And when Ackman was bailing out of everything, this based on her recommendation, because she said they were working on Botox stuff, and now I'm not even sure that they're going to do it. But they've just gotten this company so much more efficient, and in fact they changed the name to Bosch, and they have which is the used to mean just the contact lenses and stuff. So they have a pretty good niche going. But this has a lot of work to do, as anybody could see.
Yeah.
But I loved it, and I've been I'm out of 90% of it, and I paid her a finder's fee as we went along.
Well, that's a never-ending fee.
Yeah, of course. But at least she earned it.
Yeah, I mean, 2 months ago, that was just a beautiful pattern.
Yeah. In fact, I said 2 months ago, I said to her, Liz, I'm thinking about buying it all back, go take a look to see what's going on there. And she is 8 months pregnant, so she got, and she has a one. Well, Julian's going to be 1 next week, so she has her hands full. So she said, "Oh, Dad, I apologize. I didn't do any research on it." I said, "That's okay. That's all right." So it was trading 21.80. I know that's the area you're looking at because it looked so powerful.
I mean, look at this thing on the quarterly. It's amazing. Yeah. I mean, you should get another $5 out of it just off the quarterly.
Yeah, wouldn't surprise you. Wouldn't surprise you. Yeah. Let's see what the euro does here. This is going to be a busy weekend. I got board meetings and stuff, and I'll be traveling. In fact, I'm going to go to the airport early on Thursday so I could sit and trade the ECB meeting because my flight's not until like 9:55. But I'm going to park my ass and just sit and listen. Now, the DAX may struggle a little bit if the euro were to actually rally. I mean, there's another chart that interesting. Let's see what it can do.
Yeah, it's trying here too. I mean,
it's trying. You know what? Again, as I wrote the article, and I was talked to that coming off of when you put a carry trade on. Some of the guys who wrote, actually the writing into the blog has been really good. There's been some great back and forth. But when you put a carry trade on, the classic carry trade is you borrow a low yielding currency and you hope that it's low for the reasons yielding. I'm talking about the interest rates because you're borrowing in that and you hope that the underlying fundamentals are weak as well as low interest rates, except the Swiss always is a different story because when they lower rates, it's not because the economy is weak. They just want to take the upside pressure off the currency. So all things are not the same ever, but you always hope, if you leave it unhedged, you're hoping, of course, that the currency is going to go lower. And then that's the real game because then you'll be able to buy back. It's like being short a stock. You'll repurchase it at a lower level, pay off your loans, and give back the currency, and now you've made the differential. That's the classic carry trades.
Yeah, well, one of the bigger ones in the last years was in 2010, 2011 in the Aussie. Where everybody was buying the Aussie bonds at 6%.
Oh yeah.
To buy Aussie dollars.
Yeah, well, they were looking for the reverse. They were looking for depreciation. Yeah. Because the interest rate differentials were high. Everybody's going to park their money there. They weren't having the same type of systemic problems that other banks were. Same with Canada. That's why Canada went to 110.
Yeah, and that was almost a 40% return on that trade.
Oh my God, it was huge.
On a bond trade.
And of course, as usual, the currency gets overextended, and the currency went from 110. I'm talking about futures, down to 74, because they couldn't do anything. The currency was just too strong. But that's where everybody was going to park their funds, because they were too uncertain about the.
Yeah, and 2011, that high arrow was 17 ticks from the opening range of the Aussie dollar. It was a 40-year retrace.
Are we going anywhere here? Anybody got anything?
Here, Adam wants to talk about the NAFTA deal.
Oh, yeah. What about it? It's so complicated.
And he goes, any thoughts on this latest NAFTA deal?
I think what he's asking specifically, because Adam and I had a quick little conversation about it, is the fact that it's so complicated. What are the important parts that we need to be paying attention to?
Well, the deals, in order for the Democrats to get this done, of course, they had to return to some of the issues. There's the best book written on NAFTA was called that I read was Global Class War by Jeffrey Faw, FAUX, written in 2006, I think. It's a really good book. Helps you understand it, and there's no political bias to it. He attacks everybody from Republicans to Clinton Democrats as to how it was pieced together. And the original deal called for labor reviews and environmental reviews. That's the original deal that was, went into effect January 1st, 1994. Well, of course, as soon as the deal was signed, sealed, and delivered, those all got watered down because U.S., the lobbyists who really pushed for this and who, the Clintonistas, meaning the people behind Bill Clinton, the Bob Rubins, the Summers, Greens, they were all pushing for this for the obvious reasons. Of course, the biggest effect was going to be on the ability to keep U.S. wages low. Same as what I wrote about in Sunday's blog with the effect of Gerhard Schroeder in Germany with the Hartz IV. It was all an effort to keep pressure on U.S. wages, on union wages, private sector unions. Don't confuse when I speak of union wages. I almost universally speak of the private sector, not the public sector unions. That's a different animal. So that's what it was done for. So, and they succeeded very well at it. And all the sidebar agreements, which the unions had fought for, which were to slow things and to make sure that wages didn't get too far apart from each other, and they were protecting it even more with environmental concerns that, which we're going to see more of, by the way, in any type of trade agreements that, especially if the Democrats win the White House, you'll see a lot of those. And Europe will start to invoke them too in order to push back against China. So you're going to see more of that. So there's some issues with steel and aluminum in this deal. I don't know. I can't. It's until I see the final thing, until they pass it. You're kind of groping in the dark. But from what I understand, it's really not that much different. Although labor, again, this time I think instead of actual sidebars, there are specifics in the agreement that does speak to especially wages, working conditions, and some environmental concerns. And that's what's going to make it different. And Trump, I guess, the Trump White House was willing to acquiesce to it. And the Mexicans, who were a little leery about it, didn't want to. But everybody, I guess, is happy. And AMLO needs something, It's just, as we've talked about, Mexico is a great story waiting to happen, but as they used to say about Arafat and the Palestinians, they never miss an opportunity to miss an opportunity. So that's the way I view Mexico right now, because they just cannot. They will not take the necessary steps to deal with the issue of corruption and and that's what the drug cartels bring, of course, is it corrupts the whole society, because it's going back to prohibition. When everybody was on the take, societies get corrupted, and therefore there's a cost to it, a huge cost, and they need to get it under control.
There was an article this weekend about San Miguel Allende, which is one of the great UNESCO places in the world, in Mexico. Yeah. And the cartels came in, took over.
Oh, right. Yeah, I read that.
All the shop owners.
Yep, there's no question. And he just needs to clamp down. You know what? Hey, you know what? You send the military in, then you know what? You got to have it out, because it has to become too expensive for them with the corruption too. And you'll be a compromise that they'll be able to keep some of their wealth. It's like the the kleptocracy in Russia. The oligarchs, made a deal with Putin. If you violated the deal, you wound up in serious trouble. And so eventually, do you want to be wealthy? It's ill-gotten wealth, and what it's done. But when you're preventing what I think would be a major economic development of a major economic miracle in Mexico, it's just being held back by the corruption. It's just so endemic to the society, and it hurts. This way, it's a lot of people why people come here, because it's so stifling. It's just so stifling. So they have to embark on that. Otherwise, it's going to be, again, one more missed opportunity.
Any other questions, guys? What was some of the other stuff we were talking about, Matt, over the last couple of days?
Well, just from a market standpoint, we've had all kinds of mixed signals going into and Ira, we were talking about it before we started recording, was mixed signals in the marketplace, which is going before the Fed tomorrow and Christine Lagarde's debut ECB meeting. How are you reading the tea leaves? What are you looking at specifically that will kind of give us an idea as to?
Well, okay, right. So there's been lots of things written in the last 4 days about the repo rates, and now there's a piece making its way around by one of the guys who I like best, Zoltan Prozar, on that there's going to be a QE4 because there's still a lack of funds and reserves in the system. So that's a piece that's been running around today. I think the Fed is going to be on hold. What they're going to speak, well, I don't think if I assigned a probability to it, it'd be a 95% probability that they're going to be on hold, because they're certainly not going to raise in December. I mean, if they were to raise, then you'd probably at the end of the meeting, Powell would probably resign because hell would be paid. So I'm not. No, don't let you know.
Yeah,
the world is not a world that everybody's got something going. It's whether it's an impeachment trial. There's a whole lot out there. The market's, of course, not priced to it, but there is a whole lot out there. But I wouldn't. There's not a.
Well, you also have funding constraints at the end of the year that's been written about with the hedge funds that are wanting more money, right?
Well, you know what? I didn't accept that. I thought that BIS piece was really weak. Okay. I read the BIS reports. I said I disagreed with it up and down the line when I read, when I saw it over the weekend, and I said, maybe, but not to the extent that these people think. And there's been already a lot of pushback. There was a couple articles written yesterday challenging the BIS on it, because really I thought it was phenomenally weak. The BIS has really lost its way to, my opinion, because where they used to be at the forefront of things, now they're like too much politics going on. And they used to be, one of the better things about them was that they were above it, and they're not above it now. There's pieces like that, and there's too much involvement with the G30 group. Too much politics. And I'll speak to this directly. I like to reiterate that when I asked a question to Jerome Powell, and you can go YouTube it, because it was at the Chicago Global Initiative on June 27, 2016. In fact, it was the Monday after the Brexit vote, and there was a symposium, and I went to it. And I asked a question at the, as it's open mic, and asked a question, and who guaranteed the ECB, and Jerome Powell. And now he wasn't chairman yet; he was only a governor, Fed governor. But he said to me, and I'm not making it up, I'm quoting you, not paraphrasing. when I asked who guarantees the ECB because of their huge balance sheet, and he, without blinking, said they have a printing press. Okay, it told me a lot. Well, later in the year, there was a speaker. He was from the BIS. He worked at the BIS at the time. He's still at the BIS. Jaime Coruna, who had been, I think, the head of the Bank of Spain at one time. So he was there speaking, and I asked him a question about, and this is very important for anybody who trades in the global macro world. If you, under BIS rules, Basel III, or maybe Basel II, all sovereign debt carries a zero risk weighting for banks. So if I'm an Italian bank and I buy Italian government debt, I don't have to reserve against it. Okay? Whereas in a fractional reserve, in a fractional reserve system, it's like, if I make a loan on something, I have to reserve against it because, if I'm holding that, that's why a lot of them package them and get rid of them. But if I have to reserve against, I have to reserve against all the deposits that I have. But if you buy sovereign debt, it's a zero risk weighted asset. That's how they refer to it. So you don't have to reserve against it. Now think about that. That says that all government debt is equal, right? Because I'm saying, especially in Europe, it was interesting at the height of the crisis because Greek debt, except nobody wanted to buy, Italian debt, Spanish debt, and I said, wow, you're allowing these banks, so why don't you? So I asked him, I asked him this question directly. I said, Mr. Coruna, when you were the head of the Bank of Spain, I'm pretty sure you agreed that sovereign debt should be a zero risk weighting. But now that you're at the BIS, do you still hold to that view? And he started chuckling. He really didn't want to answer the question directly. But he understood it's a big question because if those regs were changed, okay? So let's say they put a risk weighting on Italian banks of 15%. So if you bought 100 euros of sovereign debt, you had to hold back 15% or 7% or 6%. So imagine the capital hit to these banks because all of a sudden you want to see a jump in the repo market. I'll show you a jump in the repo market because people would be striving for cash in order to cover their the regulatory basis. So it's not an insignificant question, but yet I'm only saying this because the BIS shies away from it. The fact that they have not changed that tells you how political it is. So their work, I saw that story. I said, I read through it. Too much nonsense here as far as I'm concerned. And there's been some pushback about it. So you have to be very, very careful. And then Bloomberg put out a story yesterday about the 9 trillion euro repo market in Europe. Well, the article really didn't get that much traction because nobody thinks of it, as a repo market in the same way that they do with the U.S. and the Fed. But, they were talking about it, that there are risks to it. Yeah, and there are risks to the repo market in Europe. And that was one of the problems of what Draghi did with the continual QE. Because, according to the European rules for the ECB, the articles of its creation, there's that capital key. So the ECB, in order to buy assets, has to buy them on a GDP rated basis. So of course the most that they buy is German. But when the German is running budget surpluses, there's a shortage of debt, of German debt out there. So that's why German debt was so dramatically impacted because it's the same thing in the repo market in the U.S. You need the highest quality debt. Nobody wanted to buy Italian debt or very few to buy much Italian debt, because the risk of holding it, you were worried about. What if the government fell? What if they dropped out of the euro? So a lot of people, shied away from it, and it wasn't used for repo, and it put so much pressure on the German debt. Now it's eased, of course, as you can see, because the spreads have eased, because they're not concerned about Italy necessarily falling out of the EU. But that will always be a problem as long as the regs and rules for banking say that you need high-quality liquid assets, so, especially with the Germans being on the black zero, or balancing their budgets. There is, by definition, a shortage of paper. So that's why we don't even know when it comes to trading the European debt markets. We talk about the Bunds, the French oats, the Italians. We don't really know what the ECB is doing because there's no transparency there. They talk that they hold rigorously to the capital key, although Draghi would say, well, we may violate it at times, but when it comes to flow versus that the flows may not be right, because some days they may overbuy in ones that they shouldn't, but at the end the stock, that's the word to use, the stock of the debt will match the capital keys. We don't know that. That's why I love to trade that debt, but there's a lot of risk in it because there's a lot of BS going on as to what really is taking place. So,
we got a couple other questions here. Joe's asking, I was reading through the new European Commissioner for Energy's answers to the European Parliament questionnaire, and saw she mentioned liquefied natural gas by name, natural gas in general, and a couple of her answers. How much are a European Commissioner's statements worth, do you think?
As far as what? On LNG? On LNG?
Yeah, I think in general.
Okay. All right, let's speak to LNG. As far as I understand it, there's a developing spot market. And I stress developing, because for a lot of years, that's why when Trump started talking, well, we're going to ship, liquefied natural gas to Poland, where they were supposedly building a terminal, and I think in Rotterdam, to be able to ship U.S. natural LNG. But that was a myth, because if you go back, like firms like Cheniere Energy, which has been one of the ones I've been really all over of them. I'm out of it right now. I've replaced it. I'm dabbling with this RRC. Is its
Range Resources?
Range Resources, yeah. And I would tell you why, because with this group of old guys. I know this. I'm in a young group here, but in the group who I sit poolside every Monday in Arizona. One of the guys is from Kansas and is very knowledgeable, and Robert will probably know about Range Resources, because he said they're a good natural gas player down in the Permian. And so was I waited, because it was when he said it was about $8 or $9, so I just bought it at like $4.20. I sold some out at $4.95 on the recent rally, went down to $3.50, and I'm still sitting here with a little bit of a loss. A sizable position, but I'm watching it.
Well, if he gets back over 420 again, it's going to rip.
Yeah, and it's trying this morning. But so I think, but the LNG down in the Sabine Pass, which is where several big plants are, those were all contracted because it was built with Japanese, Chinese, and other Asian money on long-term contracts, which was, anathema to developing a spot market to determine prices. So I'm watching it very closely, because LNG is not cheap, because there's a shipping cost, because there's a process to it. You have to go through two processes. You have to take the gas, freeze it, because that's how they ship it in these ships where it changes its state from a liquid to a solid, and then they when they deliver it to where it's going, they convert it back to, its gas form. So it is a little bit more expensive, but as they try to wean themselves off of coal, which is, I guess, the big statement that we're trying to make here, because when you think about Europe, Europe has a lot of coal, by the way. It's one of the problems with Merkel. I have my problems with Merkel, as anybody who's in this room knows. But when she, after Fukushima in 2011, and she moved to basically mothball by the end of 2024, I think, all the nuclear, or 2025, all the nuclear plants in Germany, which really put the German energy market on stress. You can look at all the large German energy producers. They have not really performed well because there's been a lot of costs. And Germany, I think, pays the highest cost for electricity now than anybody in Europe, for sure. So there is a sense, and again, let's look at copper, because what Lagarde is speaking to is basically what AOC and others in this country about a green infrastructure build out, which the cost will be enormous. But if Europe is looking to do this while at the same time creating a euro bond, trust me, this is what Lagarde's looking at. That, we can do this, we can pay for it. We'll issue these bonds, but it'll be $1 trillion program, or for sure, €1 trillion program.
There's one ancillary question along with that. Do you think, would zero risk weighting have anything to do with that ECB bond from Lagarde?
What bonds? I'm sorry.
Andy was put in a question here because you were on the ECB bond today.
Yeah.
He was asking, would they put a zero risk weighting on it? And how would that affect it?
Well, listen, under BIS regs, all sovereign debt is zero risk weighted. So unless they change that, it actually would ensure, again, I think that's the exit strategy for the ECB anyway, and I think Lagarde knows that and is going to push for it. But you've got to get some type of consolidated, and I stress the word consolidated, debt market to do that. But it would carry, just like a U.S. Treasury. U.S. Treasuries are zero risk weighted. So I don't see why not. I think that the BIS should really be looking at that, because I think it's a terrible, terrible rule. But they know, as well as you and I know after this conversation, that the capital hit to banks would be enormous, because there are a lot of banks would be highly undercapitalized if they had to reserve against their sovereign debt holdings. So they're not going to move on it, but I find it one of those really bad elements that exist in the global financial system. It's just crazy. And I always I disagreed with him when he used to talk about it, but Mike Millikan used to say why he liked even junk corporate debt, because he said a lot more government defaults on a percentage basis than corporations. I'm not sure if that's true, but he used to like to espouse that view. Yeah, we are not, whether I like it or not, and she's going to do her best to get this done. And there's a lot of projects. The Brits, we're not even going to talk about Brexit, but I will say this: you've watched what the euro sterling has done.
Yeah.
Coming into this, and it's a direct barometer of the polls of Johnson versus Corbyn, and that cross tells you a lot. But it tells you why Britain and why all these great economists. Mark Carney's a joke, as far as I'm concerned, as head of the Bank of England, because he's been as dead wrong as anybody. But the weak sterling acted as a safety valve for the British economy. And when everybody was predicting all these, massive slowdown in the UK's outperformed Europe. But the sterling was the safety valve because it was so weak. I mean, go ahead, Judd, throw up the euro sterling chart.
I got it up. I'm looking. Jack and I were going over it yesterday.
Yep.
Late, we were looking at the semi-annual, and as long as it's under 84.65, it's weak.
Well, and I'll tell you this, because I've I know this chart pretty well. But if you go back to that 8250 area, I'm going to put it up myself right now on my screen. You go to the weekly. You look at that 8250 area, okay? And all we do is have to go to June 24th, by the way, because that was the week of the
2016.
Yep. So the week that I talked about when Powell. Okay, so let's go to the week of the vote. The high was 83.17. The range was huge, and the week of the breakfast 76 to 83.17, with a settlement at 81.30. Well, let's go to the following week when the market really had time to absorb this, and the close the following week was 83.93. Okay?
Yeah.
This is big because now you're getting down into these areas going back to the original Brexit, the referendum. So we're back into this territory. Pay very close attention here. Because, listen, the sterling, I know people personally who are looking, private equity type people who are looking at British assets based on the, a 130 sterling, a 131 sterling as British assets being cheap. And again, that's another part of the carry trade, by the way, because when a currency cheapens, their assets get cheap if you have dollars especially or other currencies. So you see the market's already anticipating Johnson winning. Where Brexit will go from there, it doesn't know, but Johnson will be in control at least and be able to direct traffic far better than anybody else has. And hopefully Corbyn will disappear for many reasons. If you got a Corbyn victory, I can promise you this. Do your measurements off the Brexit vote from June of 2016, because you'll get that same type of thrust. And I think the high, my weekly doesn't reflect it, but I remember having a long discussion with my technician at the time when sterling, when that cross got up to almost 99, when Britain was doing everything it could well before the Europeans, to counter the effects of Northern Rock and some of the problems, and the Bank of Scotland and all the problems that the UK was having with the great financial crisis. So what they did, they cut rates. They were doing QE like everybody else. They haven't done any QE in years and years. They stopped at, I think, 475 billion of sterling of purchasing of assets. But the sterling weakened dramatically against the euro. Yeah. And the Brits are smart. You know what? They understand. They've been at this a long time, that it does provide a safety valve, and they've used it as such. So but now we're getting into the 2 weeks after Brexit vote. We're into those areas. Now I'm very interested. I haven't traded this. I've watched it, and it's been very, because I'm just, you know what, the political risks were not worth it for me, even though this has been a solid play.
Yeah, well, we talked about it in August.
Oh yeah, and I would be on Santelli, and I see everybody's saying this, and that, but if that's the case, if it's as bad as people were saying, this is even when Theresa May was in, then why aren't the gilts falling apart, and why is the FTSE one of the best performing? Now, if you overlay the FTSE with the euro sterling, you'll see exactly what I'm talking about. That is purely about the currency.
Yeah, and we were on. Anybody can go back and listen to that conversation when the pound's putting that out. They were putting in that outside reversal higher week, and we didn't want to touch it because of the political risk.
Right. Yeah, it was great. Let's see. I'm just going to put up a FTSE chart. Let's see where the FTSE was on that same week. I haven't. Okay, I mean, you see the FTSE actually rallied. First it broke that week. It closed at 59.99 the week of the vote. And then the following week it had a big rally. And we've kind of sustained that. So you can see the pattern there. but it's been because of the weakness of the sterling on a relative basis, because it's kept British exports very competitive, and the German auto industry, as well as the Japanese, turned Britain into an island of car manufacturing, car production.
Yeah. Yeah, and there's huge buy stops in the sterling that are building, and they're all at 133.82 on the semi-annual chart. You got a double top up there, and that's where all the buy stops are.
Now, okay, so that's some very important areas to watch. So we're not there yet. And again, if you look at this, I can speak to because this is public knowledge, but CME released their product volumes for November, and they were, on a comparative basis, November to November, November of 2018, 2019, those volumes in currencies, bonds, things that we know about, which have been very low volatility, reflected a decline in volume, because we know that in liquid instruments, volatility begets volume. Now, is just like when prices sit and grind and do nothing, we know that moves are coming. I'm convinced, just from a trader perspective. I'm not talking about CME investments or anything. I'm just speaking from my trader perspective. When I see low vols like that in bonds and currencies, they won't sit there forever. And there's a lot. That was my piece really on Sunday night or Sunday afternoon when I wrote about the carry trade, which I think we should discuss here, because I think
I'd
people
love
need to be. Yeah, that'll be my last. So we'll get to that. But I'm looking for. When I put up. Hold on. EUE. Hold on. Let's see what Euro vol right now. Okay, if I'm looking at March Euro vol, not Euro dollars, Euro currency.
Mm-hmm.
Yeah.
Anyone want to guess what vol is priced at right now for March?
It's got to be insanely low.
4.84 on the March calls. I mean, that's really low. I remember when the CME bought the Board of Trade. Okay, I wasn't on the board then, but when somebody said they're paying a lot of money for it, they had asked me. I wasn't on the board, but I just had an opinion as a trader. I said, yeah, not really, because I think it's actually priced well, because at that time the bonds were very low, and the vol was about 3.5%, believe it or not, on the 10-year, on all the bond options. And I said they're still doing pretty good volume. If you're doing that kind of volume with low volatility, there's upside potential. I'm just that's my trading instinct. So I the currencies have been quiet for a reason, by the way. Everything the central banks do speaks to currency valuations. I can't stress that enough to people. It's just a fact. So how long can they hold it? And this will segue into Sunday's piece on that came out of the FT article about the euro being used as a carry trade.
Right.
Okay. Now, and I cited, it was the same thing with the Swiss franc in 2015. The Swiss franc was a heavily used carry currency, meaning what was going on is that Eastern European banks, Polish banks, Hungarian banks, Czech banks, they were having people buy houses with mortgages borrowed in Swiss francs. because think about it. If the Swiss rates were already substantially low, because they were doing everything they could to hold what at that point was the peg. Judd, put up the Euro Swiss chart for everybody to see. Cash.
All right, it's up.
All right.
I put up the semi-annual so they can see the. What do you want on there?
Okay. So if you go back, I'm looking back between 2012 and 2015, or 2014 to the end of the year. Okay.
Okay.
Now you see that, and if you see it on a daily, you can even see it. It'll show you, but look at it on the weekend. You can see the sideways pattern. Okay. You see where it's 120?
Yeah.
Okay. The 120 was the floor to the peg. So when it got down there, that was the Swiss appreciating against the euro, because it took. Okay. Do you understand that? That's what you're looking at.
Uh-huh.
And you see it going back to 212. You see 120.03, 110.
Yeah.
So there
All
were
that congestion for
okay.
2 years,
And
3
for,
years.
yeah, 2.5 years. So now I can say this definitively because the blog had. I wrote a blog the week before on January 8th, 2015, and I was on Santelli twice in a month between December and January 8th. And I said I would be very careful here. And all the option guys were busy buying, we're selling vol because, it was going nowhere. So if it got up a little bit on the options, on the Euro Swiss options, they would be selling it. And I was talking to some of these guys. I said, I wouldn't do it. That peg's going to go. No, they're holding it. And it got so intense that EBS, the Merck didn't own them at the time, but EBS had made a big stink because the Swiss National Bank made a stink because somebody got a 119.97 print in, okay? And the Swiss National Bank said, it cannot be, we're on the bid 120, end of story. Because what existed in the bank market, of course, were what are called knockouts. And if you could get through 120, your option got knocked out because you were betting that it would never go through 120.
And the bank takes the money.
And the banks would basically, then your option became worthless and they pocketed the money. So the Swiss National Bank was adamant. There's no way. So there were people who held those options who said, no, it never traded there, even though certain trading platforms had it. That's how intense this was. But anybody can go back and check. You can go watch me on Santelli twice and read the blog. And the guys from Vine Street at that time they actually put on, they bought Swiss and sold Euro options. So it was really a good play for them. Because I said, you can see that pattern. But it took more and more and more intervention by the Swiss National Bank to hold the peg. Well, if that's the case, you can't hold it. And you see what happens on January 15th. There was a meeting. That's what I was pointing to, is that watch this meeting. This becomes important. And then, of course, the following week, the ECB, and they ramped up their QE program. But look at what you can see, that bar. Well, that was in the carry trade. So if you were borrowed in Swiss francs, you got fractured. Because the Swiss franc, you can put up an individual Swiss franc, the Swiss rallied dramatically. And so all these people who had mortgages priced in Swiss francs, they were on the hook for buying super appreciated Swiss francs. So what was a cheap way to borrow turned into an absolute debacle. And in fact, there are still court cases pending against the Eastern European domestic banks who put these people in there, trying to settle this out. It's been billions upon billions in settlements because these people were on the hook for a shitload of money. And again, unhedged. So the point about the euro being a carry trade, that people are borrowing, what's the line? Hold on, I have to go to to the blog from Sunday. So let's do this right. Oh, okay. Well, the line is used because the Swiss, the Europeans are generating all this balance of payment surplus, which gets lent out. So as they say, it's a great line. I want to get it exactly. The currency everyone wants to borrow, but no one wants to own. Okay?
Yeah, I saw that.
It's a great line from the article from this guy, George Saravelis.
Yep.
He didn't write the article, but he was the guy at the bank who published it, who wrote about it, and they picked it up. So the way it works, so if that's the case and everybody's borrowing euros, because again, negative interest rate, or if not negative zero, so I'm borrowing euros. And if a country, historically has those low interest rates to try to kickstart their economy, usually the currency is going down. So it's like shorting a stock. And if I'm shorting a stock, I'm certainly not going to hedge myself because I'm making an investment that the stock is way overvalued relative to what I perceive to be the fundamentals. So I'm just going to be short the stock. If the stock goes up, with Tesla being a recent case, you get hurt because, your work is wrong. And it costs you to borrow the stock, by the way. When you get short a stock under U.S. securities law, you have to borrow the stock from somebody. It's a big profit center for Wall Street, by the way. And to me, if blockchain is ever successful as an electronic ledger, it'll put an end to stock lending because I'll be able to hold my certificates. Unlike now where they're held at what's called street name in a depository trust. This is a complicated thing. It's not really that complicated. Everybody as an investor should be aware of it. Most people aren't, but I'm not going to get into that here. But
well, Ira, everybody that buys a Tesla is told to, and if they own stock, to restrict their stock. Did you know that?
No, I didn't know that.
Oh yeah, everybody that buys a Tesla, anybody that owns Tesla stock, Musk has told them all to restrict their stock from being lent.
Yeah, and you can tell when there's a heavily shorted stock because the borrowing costs go up, of course. But your brokers don't call you and tell you, hey, I just lent out your Tesla stock. We're making 8% on. I don't know what the actual number is. I'm just hypothetically.
It's really hot. Yeah.
They're not depositing that in your account, by the way. Who's getting that. It's a big profit center for Wall Street, but that's just, okay. So, but you can see the way this all sets up. So my point in the article was this, because everybody, and Goldman, now they came out that they're looking for 115 in the euro in 2020. You know me, I told you I'm not selling Swiss anymore. Against gold, and the euro was to me. I said when I turn a little bullish, everybody you better sit up because I've been so bearish Europe across the board for so long that if I'm getting a little bullish, you sit up and pay attention. It's like in the War of the Roses when Danny DeVito, who's playing the attorney, he says, I'm going to give you some free advice. And when a man who charges $450 an hour offers you free advice, you better sit up and listen. So that's my feeling about the euro. And I know, a lot of people can find reasons, and there's plenty of reasons to be bearish. But Lagarde is in a hurry here. So, but if now there's a meeting on Thursday, so we'll talk about that ECB meeting in this regard. If she starts to make hints that, she says that she's going to review ECB policy. And are they going to change their inflation numbers? That'll be interesting. Instead of being a hard 2%, as Draghi liked to use it, is she going to set it to a range of 1.5 to 2.5, which means if she does, interest rates will go higher because we're already at 1.5 or 1.4, but it'll mean that the bank can move off the negative or the negative zero bound or the zero lower bound, wherever we're at. They can move off their NERP policy, which will make the euro vulnerable to a rally because people are short and heavily borrowed. That's the only reason I'm bringing this up. And I don't know that it's going to happen, but it's certainly there's something that's going to exist out there because this has all been done, based on negative interest rates. And I think in the last conversation we held, which, makes gold struggle here a little bit anyway, but we'll see what happens with that because it's more about the entire global banking, central banking structure. Okay.
Well, let's go into the price action for a second, Ira.
Okay, let's go to the euro. Okay.
Well, all the ECB meetings under Draghi, the last however many over the last couple of years, you got rallies to nowhere and huge breaks.
Yep.
And now, basically, so what we're looking for is a possible weakness and then a big rally. And then if we start seeing that, then that's going to be a new game change.
That's a very good point. That's a great point. And so, yes, pay attention to that because, yes, they would rally. And then as soon as the press conference started telling, except for, I think, when it looked like they weren't going to, head back to QE. So, in the U.S. in June, I think it was, when the dollar, weakened because the Fed in June, that's when we saw the $200 move into gold. From, right?
Right.
So that set other things up. But if you look at a euro chart on a weekly, we see that the low for the last decade anyway was made in January of 2017 at 103.41 in that whole area.
Yeah, when we both knew that on the work that we've been following forever that it was sold out, and that's when Goldman and everybody else said it was going to $100 to 90 to 80. Right.
But the interesting thing is, even with the ECB far more active, and the Fed being all over the place, meaning that if we go back to last December, rates were at 2.5%. Now we're down to 1.5 to 1. So we're 100 basis points lower from last year, basically 80 basis points, and yet we have not revisited those lows, and yet the ECB is at -50 with a new QE program. So this, for all the people who are bulled up on the dollar, I'm much more the other way here. And when I think about the carry trade, if the carry trade were to unwind, you could take Goldman's 115. That's what their target is for next year. And somebody who sent me the article, I wrote back to him immediately. I said, if Goldman thinks 115, and you look at the formations, we'll see 125. Which, Judd, you know what that level is. That's the area that it failed from. But with this massive amount of people short, because a carry trade unhedged is a short position. End of story. They're short euros. And if they sustain themselves short euros, did you eat breakfast already? That's all I wanted to point out with that. And Lagarde is aware of this too, but people say, oh, the euro this year. Well, I think if we take, since the launch of the euro, I think that probably the average is, 117 or 118 with all the highs and lows and it's smoothed out over time. So the euro is still, where can it go to? It's been up to 160. Can the euro be very competitive still at 130? Don't know. We're going to find out, though. I think. I can't time it, but I think your point is well taken. Watch it as she says, because she knows that the Draghi regime at the ECB, while it did save the euro and made her life somewhat easier in her role at the IMF, it's not been a good policy, and the European banks are quietly screaming. They just don't they're not noisemakers like that. It's a very dignified approach and serene approach. But the fact that German banks have started charging large deposit of negative yields, that's their response, and this needs to be corrected. And the real danger is, and they better be weighing it, is because of the huge carry trade. Now, let me add this to you. Because why is the yen the risk-on, risk-off trade? It's a huge amount of investment of the Japanese firms, pension funds, insurance companies, corporations have around the world. And when they start to get nervous, the sense is that they're going to bring money home, which converts to yen. That's the whole basis of that risk-on, risk-off, because the Japanese have such massive amounts of investment around the world. Well, Europe too, which is that article points out that they're busy lending their balance of payment surplus. That gives them investable capital all over outside of Europe, whether it's held in debt, whether it's buying, productive capacity. There's a whole lot of investment around the world. And well, if the flows would start to reverse, either because of interest rate differentials changing or other concerns, it would impact the euro. So worth watching.
Yeah, and it's
worth
also worth breaking out the entire euro chart, because it's extrapolated if you go back, and it's all D-marked. So if you go back to the actual euro low in 2000,
yeah,
and you do the swing from 2000 to the 2008 high,
okay,
that's all euro.
Okay.
The rest of it's D-marks.
All right.
So it's interesting. If you just, I was just playing around there and just looking at the swings versus the Plaza Accord swing, and then just the Life of Euro swing.
Okay.
So you get back to that in 2017 off this low, you picked 125.5 and it went right there. And now we're looking at basically there's a shot at going back there again if this unplayed.
Oh yeah.
Yeah.
And again, I only point out the Swiss, why you look at the Euro-Swiss trade, because when they pulled the peg, that was the thing, because everybody was convinced. In fact, a week before the peg was pulled, the Swiss bank president was out talking about this peg. We'll never, this peg, we mean business. I go, as soon as they have to start talking to it, you know that there's trouble, which solidified my view. And you can go back and read the blog. I mean, it's just not to say, no, but it'll show you the dance around it. That's again, Matt, what do I bring to the table?
Context and nuance.
That's exactly right. And this is the classic case of it. So did we find context and nuance here? I think so. And that's what elevates it. And you know what? Maybe you can buy some options. I haven't done it yet, but I'm looking at it. That's how I knew where the volatility was, because I have been pricing them going, well, how stupid am I going to be this time? Because I have to tell you, as I famously tell the story, I made more money shorting the Swiss that week of January 15, 2015 than I made being long. What a shame that was.
Walking down the street from Vine Street to the Board of Trade than you did.
Yeah, it was terrible. Yeah, terrible. And they were laughing at me. They're laughing at me as I'm putting in orders to sell on that. One day it went up when the Swiss franc itself went to 120 in IMM terms. And I got filled, and I was losing a little bit of money, but by the next morning it was down to 109, 110. So I made money, and they go, wow, what a dumbass you are. I said, no kidding. I have to own it. They said, yeah, but at least you were smart enough to short it. I said, well, that was out of pure frustration. I go, this is insanity. I'm going to put up a Swiss chart just to confirm my stupidity. God. Sometimes it's hard. Sometimes, there it is. On that week, we got up to 122.82, and I can tell you, I got filled at 118.5, 119.5, and 120.5 while I was on the treadmill at Lifetime.
God.
That's how well I know that trade. And when it went down to the next day, 112, 113, I couldn't wait to cover them in just to kick myself in the head. But this is very important. This is another one of those. Now, will it negatively affect the European stocks if the euro rallies? Probably, but it's going to be a push and pull between, is the euro going up because there's, just like they talk about the U.S. stock market built on foreign flows, right? It's all you hear. Well, the dollar is strong. The dollar's not that strong, but the stock market attracts foreign money. Well, I'll tell you what, if they get a sense that there's a massive infrastructure program coming in Europe, let's go back to the LNG and the energy. One thing I've written about over the last few years is Hinkley Point, which is the huge British nuclear project, which I think the Brits have really missed the boat because they should have been financing this with bonds sold to the ECB. Because as long as the ECB's out there looking to purchase debt, and they're buying corporate debt, they've bought a lot of lousy corporate debt that they've actually suffered some losses on. The time does avail itself to it. You know what? Don't be stupid. If they're going to, again, if the ducks are quacking, meaning the ECB buying all that debt, it's, time to feed the ducks, as we say. So things to look for, and this is going to be a busy week. I'm going to be in a board meeting tomorrow during the Fed, so I won't be able to, I'll have to catch up to it afterwards.
Your EURGBP idea has just been a monster.
Yeah, it's really, is it working today? I haven't.
Oh, yeah. It's on change.
Yeah, and you know what? And that's really a pure play with good because they have much better management than Fleur. But that has been a play on the European infrastructure project. I'm really glad I added to that one on that breakout of 20.5, 2080 in that area. So, but this is one. I mean, historically, it was.
Yeah, and it's right up at the daily oscillator too. So if it can hold up here another day, then it gains momentum again.
Yeah, and you know what? This is what's really, as we've talked about, made the copper, I think, because the copper is now a play on some sense of European infrastructure build-out. Because if you go to a green infrastructure program, when I say green, it's all types of things. It's wind, it's, not solar so much, but electric cars use massive amounts of copper. Copper's been a very dormant commodity for a while.
Yeah, it's just gone sideways forever.
Yeah, it goes up to 270, comes back down to 250. But over the last 5-6 days, what I call the Lagarde barnstorming tour, it's, when was it? Friday it had that massive up.
Yeah, and then it had a big up, in September and followed through, and then it rolled back down, and now it's trying to do it again. Yesterday's
action was really interesting because as the equity markets got weak, which it's been trading so much with the equity markets, so they did have a sell-off from the late rally on Friday. So, yesterday it got down to where it was, lower on the day, and then wound up having a nice rally by the late end of the day.
What did he say? Yeah, he said here, Joe's saying he was talking about Total as a shareholder in Quartagas. It's the largest LNG producer in the world.
Yeah.
So the oil and gas are like 8.5% of the IBEX. And the other petro companies are big parts of Italy and Portugal's indices as well.
Yeah.
Could be a way to kill two birds with one stone, reducing CO2 emissions and supporting the weaker European economies.
Yeah. You know what? It's and they're going to sell it, of course, is then moving away from Russia and Gazprom. But as you can see, we haven't even talked about that. That'll be in the next meeting. They had that the Normandy meeting, as they call it, over the weekend with Merkel, Putin, Macron, and Zelensky to try to resolve some of the strife in Ukraine, and that's because Macron wants to get the sanctions off of Putin. He sees what we've talked about, and I'm not a Macron fan because again I think he's too much like de Gaulle, and I was never a de Gaulle fan, but I think he's punching way above his weight. But right now he sees that, and he's trying to get out in front of it because Europe needs Russia. They've always needed Russia. They just couldn't come to terms how they was ever going to, I can give you 400 years of history, but you'd all fall asleep, and that's not the resolve of it. But interesting things going on. But who is that? Who put that? That's really good work.
Joe Pender.
I'm sorry?
Joe Pender.
Okay, thanks, Joe, because that's really good work. And tell Robert I gave him a shout out in the blog the other night. So.
Yeah, I saw that. I don't know if he's in right now.
He's traveling.
He's traveling.
Oh, he's traveling.
Yeah.
But very important. You know what? And again, as I'm telling people, come to sit in this room because you might actually learn something that will provide opportunities. There's enough to and fro here. All right. Any other questions before I disappear?
No, it's one of these other ones. We'll do the yield curve, but not now.
Oh yeah, that's an important one. You know what? And I'm playing with them here too. And we got a big move on Friday, which was made my week. But with the 2.5, I'm staying very conservative with the 2.5. And the Fed, if the Fed does nothing, but one of the things they'll talk about is that repo facility and how they're going to extend it and what they're looking to do. So that will be part of the discussion. But they're not moving rates, and people think they may raise. I read an article from somebody put out. It'll be a tough year to raise rates, especially with the president breathing down his neck. And the president, love him or hate him, he's gotten what he's wanted from the Fed. So he's gotten everything he wanted from the Fed.
He's squeezed him. He's put the pressure on him, and he's got him right where he wanted him.
Yeah, you know what? Yeah, he Joey Gallo'd him.
He did.
No, he squeezed him. I just watched The Irishman on Netflix. So.
Isn't that great?
Well, Scorsese needs to learn to get an editing machine, but first of all, it's the first time we were just talking about. The first time he uses real names in the movie. So somebody wanted him to make this movie.
Oh, great point. I didn't think of that.
Yeah, and one of the guys I happen to know well because I ran a charity committee and he was on the committee, and they did really great things for helping mentally disabled kids in the 50s, 60s, 70s, and 80s when I ran that little city golf tournament. And the NBA dinner, Judd, I don't know whether I ever took you to the NBA awards dinner, which used to be run by Little City Foundation.
Yeah.
And that was with the help of Teamster people, so they really helped raise a lot of money for Little City Foundation.
Alan?
Well, yeah, I would say that's the closest one. I used to play golf with him quite a bit. And I was a little bit friends. He kept his son, David, who was just a lovely, really lovely. But I got my Weimaraner from him because he bred Weimaraners. But really, they did really good stuff on. I mean, it was interesting. And then I was in a business deal in which they had the Central States Fund invested, but it was, under pure federal direction. So I was telling a story when I had to go over and get a paper signed to get them out because you couldn't do business with them, even though it was really good for the pension fund. It just, it took 6 months to get anything approved. So you just had to get them out. So, Yes, but so when I watched the movie, it was just way too long. It didn't need to be that long.
I thought so too.
But I had never
Yeah.
do, so it was okay.
But an interesting group. But I think we were talking about that too. I think they played with the truth on the Gallo hit.
Yeah, well, we might have.
Any word on that, man? Any sound?
I'm actually.
Still have a shovel in the backyard, man, or what?
I'm actually thinking about whether or not to open my mouth or just quiet.
Probably
No. Listen, it is what it is. But I really think that they wanted him to make that to put it to bed.
Yeah, I agree. I think you're right. I don't know if I ever told you the story. I'll tell you more about it later. But when we took the clown dude to San Tropez.
Yeah, no, I don't want to hear. Don't forget it. Don't
Yeah,
talk about
forget
it.
it.
Yeah.
All right.
It's you know what?
Edit that out.
As my kids would say to me years ago, Dad, that's way too much information.
Yeah, no kidding.
All right. I'm gonna.
Gave you some work.
I'm closing the recording, guys.
Yeah, that's.
You can say whatever you want.
It doesn't matter. I mean, there's nothing here that's
No,
not.
they're all